7:30.
Yep.
Hey, it's Greg Harrelson here with Century 21, the Harrelson Group, with my co-host Abe Safa, of course, also with Century 21, the Harrelson Group, and we've got some great information for you this week. We're going to continue on our mission of making sure that our audience is the most informed property owners, buyers / sellers in the marketplace. So hopefully you feel that we're delivering on that promise. Abe, welcome to another a great week.
Hey, Greg. Yeah, another busy week here in the market. And just still on fire. There's no question about it.
That is correct. Yeah, it is hot, and it is hot as fire, and it's hot outside. I was getting some steps on one of my calls today, and I had to come back in. I started sweating like crazy, and I'm like, "Oh, it's going to mess up my rest of my day." But hey, before we get into the numbers, we like to have a little chat about some things. And all cash sales. Wow, we have seen some significant changes in the way that offers are being presented to us, and the way buyers are structuring their offers in order to win the bid. One of it is all cash sales are on the rise. We were both looking at an article from NAR. NAR is the National Association of Realtors. They came out with an article. I think we got it about a week and a half ago, maybe 10 days ago. We both studied that article, and a few things that we want to share. The first-time home buyers are not increasing there. That's probably the only category that we read about that's not seeing a significant increase in transactions being done with all cash. And that would make a lot of sense, right, Abe? I mean, if they're first-time home buyers, they're usually getting financing. They don't have a lot of money to put down. They don't have the option to pay all cash. So do you recall, I think, is it 6% of first-time home buyers pay with cash? Is that what it is?
Yeah, it's 6% of first-time home buyers. Yeah.
Okay.
So it does make sense. Like you said, you wouldn't expect them to come in with a lot of cash if it's their first property.
That's right. Yeah. They're not selling anything, and they don't have any equity. They are first-time home buyers, quote unquote. But if we take the first-time home buyers out of the equation, based on April 2021 compared to the previous April, that's when they just did the study, 33.5% of all residential transactions were closed in cash. Comparing that to, what was it 23 or 25% the year before? Do you recall?
I don't recall. It was in the 20s.
It was. I have it 23 to 20.
26.3.
26.3. Okay.
Yeah.
So it went from 26.3% of all transactions that are homes, non-first-time home buyers, paying cash the previous year, to now 33.5% of people are paying cash for their homes. What about the vacation market? What did we find about the vacation market, Abe?
Yeah, so that number is significantly higher. So anybody in a vacation market, that number, God, what was it? 60%, 61%, Greg?
61%.
Yeah.
So it's 61% according. Now this is not all just Myrtle Beach, right, or the Grand Strand. This is a national statistic, but we are seeing this follow similar trends in the Myrtle Beach area. Also, 61% of vacation homes are being purchased by cash versus 50% of the transactions before. So that in itself is a little bit over 20% increase in the number of cash deals that we're seeing in the vacation space. Now, one could ask the question, well, where are they coming up with the cash? I really don't know. But what we do know is they probably had the cash already. They were just leveraging financing. But what we're seeing right now is that when we're in multiple offer situations, some people are trying to figure out how do they pay all cash so they can win the bid. So if there's a financing contract with a financing contingency versus a cash contingency, a lot of times the sellers are going to take the cash offer because they feel like it's higher probability of closing. Now, you're also going to find that there are people out there that have equity in their existing property, and what they're doing is they're doing an equity line and they're getting the cash, pulling it out of an equity line so they can pay cash for the next transaction. So sometimes those cash sales, these people are borrowing the money, but they're borrowing money off of another asset that they have. Sometimes they're taking it out of their savings accounts. There's people selling their stocks. They're saying, hey, look, it might be good to move some money from the securities market into real estate. So then they're turning around and liquidating some of their stock positions and repositioning that cash into real estate. So there's also those people out there that are borrowing private money from family members. And again, a lot of this is motivated by the urgency to win a bid, knowing that in order to win a bid, they've got to make the terms and conditions of their contract or their offer as attractive as they can. So I think, that's some of the cause of what we're seeing. You agree with that?
Yeah, no question. And more specifically in our market, we're having a lot of people just relocate down here, so they're selling their home up north, taking the cash, which is most of them have pretty good equity, cash left, and bringing it down here and paying cash for a home down here.
Yeah.
Now that's, with the market being as hot as it is and it being competitive, we are seeing some services out there that are popping up, right? Where if you were going to buy on financing, these services will actually allow you to go in with a cash offer.
Yeah.
So they'll front you the cash, you go in and make an offer, and then you have a certain period of time, I think it's 90 days or so, to be able to get the loan and then pay them back, and they take a small percentage for that. And many people are using that option because they want to come in stronger with their offers and get their offer accepted.
Yeah, it's kind of a hybrid of what we've traditionally looked at as bridge loans. It's kind of a little bit of a hybrid of that, which just services are coming up where they're saying, hey, we're going to put you in a position to make a cash offer. Then what they'll do is they'll have some sort of lien and some sort of control over your wherever your equity sits and whatever piece of real estate that sits in. Then you sell that other one, you pay off the cash that you borrowed for them plus a fee, and then you're in business. But again, a lot of this cash offer increase has to do with buyers wanting to make their offers more attractive in order to win the bid. That we see a lot of that right now. So, but
you have to. I just put a home on the market. It hit the market yesterday afternoon, priced it at $450. We got an offer early this morning, $475. Okay, and the buyer is willing to pay up to $50,000 above the appraised value if it doesn't appraise. Yeah. So I mean, that's people coming in more aggressively. That's people trying to win out a property before we see multiple offers on it.
Yeah, that's incredible. So let's get to the numbers. I know we don't want to keep everybody too long. So what are the what's the numbers look like?
Yeah, so this week, since it's the beginning of the month, we're going to go over end of May numbers. Okay, so this right here is InfoSparks, which is right out of our MLS. It's something that only us agents have access to, right? And what I'm looking at here is a chart of the last 3 years of the inventory supply of resale single-family homes. Okay, so if we go back to 2018, January of 2018, we were sitting at 5.8 months supply of inventory all the way to the end of May, which we're sitting at a 2.2 month supply. Actually, hold on, that's a 12-month running. Let's do a monthly. Here we go. Sorry. So this is individual month, 5 month supply. You see it was flat from 2018, 2019, all the way until towards the end of 2019. And as we get into 2020, you see this drastic just drop from March, April of 2020 in inventory. So right now we're sitting at 0.9 months supply of inventory. So less than 1 month of inventory of single family homes resale on the market right now. That's a 78% drop from last year, Greg.
Yes.
So 22% amount of inventory compared to what it was last year.
Yeah. And so this is totally out of balance. Like, in other words, like, this is not normal. This is not sustainable. I would love to say it's sustainable, but the reality is we can't go to negative inventory, or I think zero is the limit, right? and so, we're at the top. I mean, it's pretty arguable. It's not hard to argue that. Okay. Now, how long do we stay here? I'm not going to speculate. Is the market going to drop? Don't know. I just don't know. But I just know that this is not balanced at any level. This is so out of balance that something has got to actually balance this out. But what's critical is, if you remember, Abe mentioned a property just put on the market. Somebody made an offer and already told us that they're willing to pay $50,000 more than the appraisal value. The only time you hear buyers saying, I don't care what it'll appraise for, I'll pay $50,000 more than it'll appraise for, the only time we ever hear that ridiculous type of offer is when we're in a market like this. That's just the truth. The raw truth of the matter is that those offers will not be around forever. Those offers are around when this chart looks like it looks today.
No question about it. Yeah, and at some point we're going to see this flatten out and then start to go back up in inventory.
Yes.
So just to kind of put this in perspective, Greg, let me go back to the housing bubble. So you see right here, we were hovering around the two month supply, January of 06, and then that was the bottom, meaning the lowest level of inventory. So meaning that was the peak of the market. So January of 06, and then you see how all of a sudden it just started gradually increasing, and then the recession started, and then boom, you see it just skyrocket. So we went from roughly a 3 month supply, 2 to 3 month supply of homes to a peak of 21 month supply of homes.
Wow. Yeah.
And this was in August of 2009. And you can see it gradually start to come back to normal. 5-6 month supply is normal. It got here in 2018, stayed there for a little bit. And then, of course, COVID happened, and then all of a sudden, and the interest rate, being so low, all of a sudden we saw this come all the way down.
Yeah. So, I mean, if you compare the two charts, what you see is two charts that both show basically one extreme to another extreme.
Right.
And so, and that's typically what we see. I've been through multiple shifts in the economy and the real estate markets in this area. And usually when I see something go to an extreme like we're in now, there's a counterbalance to it. And the counterbalance is another extreme. And then after that is kind of a little balancing out, and it normalizes. It's very similar to a sugar high of a child to a sugar crash, and then they get back to normal. It kind of goes through that. It's like one's got all this energy, then one goes to sleep, and then all of a sudden it gets back to normal. That's kind of what these what we just don't know is we can't predict when these things are going to happen. But historically, you'll see in every extreme, there's a counterbalance to that extreme. Then there's some sort of normalization. And these things take years.
No question. We just don't know when it's going to happen. So less than a month supply of homes right now. Let's look at condos real quick. Condos. Wow. Like 1.1 month supply of condos on the market, which is insane, right? Because for the longest time we were wondering why there was going to, spill over to the condo market, with no homes being on the market, and it has, and it's really going in full force right now. Condos, there's just nothing out there anymore. If you're out there, I've got a buyer that I'm working with right now, wants a Beach Cove condo, ready to pay cash, ready to pull the trigger. We can't find him a unit. So the condo market is all of a sudden taking off. Inventory is super low, Greg. And you see that was almost in a 6 month supply just in April of 2020. Mm-hmm. Down 80% from last year at this time. Yeah,
incredible.
It's incredible. Yeah, it's nuts. And if we go back to all the way back to the bubble, you'll see we've got less condo inventory right now than we had in January of 06. Mm-hmm. That was a 1.6 month supply. And you see that same chart where it skyrockets up to 28 month supply. And then
counterbalance happens every time.
Yeah, absolutely. That's all I wanted to share. Just those two numbers, Greg. I mean, everything else looks good. Number of transactions is up. It continues to go up. The only reason we could see that maybe going down soon is there's just not enough properties out there to sell. So if we start running out of properties to sell, we can see the number of transactions kind of dip a little bit. But days on the market are down. Sales prices are up. Number of showings to pendings are down because homes are selling and condos are selling much quicker.
Yeah. I mean, the number of showings that we're having in our marketplace are probably going down because there's nothing to show. I mean, I was rubbing shoulders with another agent this morning, and she's like, yeah, I'm going to go show some properties, but it's highly likely that some of the properties that she has on her list before she gets to them this afternoon will already be sold, and those showings will be canceled. So it's a great time to have a property on the market. I mean, yeah, the other day, and just like your scenario, I may have told this a week or two ago, but I had an offer on a condo. It didn't appraise. We told the buyer we're just going to go ahead and let it fall through. We'll relist it. I know that it's going to appraise by the time we actually get a next contract on it. The buyer realized that, you know what, I better just go ahead and pay above their appraised price, because by the time they actually wait for the next one to come on the market, they're going to have to pay more anyhow. So that just says, it's like a property doesn't appraise. And as a seller, you can say, I'm sorry, I won't sell it to you unless you're willing to pay me more than it's the appraiser says it's worth. We have that ability to do that in today's market. So at this point, if price is going to be a temptation as to a motivator to sell, now would be the time. But I say that because sometimes people don't need to sell. So you don't need to, if you don't want to sell, then don't sell. But if price has some sort of influence on your decision, you really want to look at it right now, because we can hold tight to some high prices and get it. All right, man. So here we are. There's our cell numbers. It's Greg Harrelson, Abe Safa, Century 21, the Harrelson Group. If we can ever help you, please give us a call, and we'll come back next week and give you some additional information. Thank you, bud.
Sounds great. Sounds good. Take care.
Bye.